Hello, it is the 16th of May 2012. It's a Wednesday. Welcome to today's analysis. We'll take a look at silver, followed by the Greek 10-year bond. The trend line, the downtrend line that connected this trend has obviously been violated, which means the rate of descent has increased. Oftentimes, when you break through this line, it can be very fast moves, which is exactly what is taking place. As I was saying before, you make these patterns of the lows and the highs. This was a matching low. This was a higher high. So this moving average starting to go higher and sideways. What was important was to find the higher low. And 30 was fine enough where if it finds a higher low and were to have made this move up like this, then this moving average would have started to go higher. And then the outlook on a bullish case really would have started to look pretty good. But that obviously has not been the case. Instead, it has been plummeting towards the downside, pretty much having a test of this level of 26 and a third. We managed to move up to about 26 and 2/3 as the low for today. If we move this on to the daily chart, the Bollinger Bands, which is not a Bollinger Band, it's a lower band. It takes the volatility of the last 18 periods on a front-weighted scale. Then from there, it triples whatever its percentage volatility is, and then it takes that difference from the 18-period average of lows and highs. Therefore, the lower band was in at 26.68, which is pretty much what the low for today happens to be thus far, and we haven't seen an update since the 4th of May, and right now, again, we're on the 16th, so it's been quite some time. The first time it managed to come down the significant 30 level, it did manage to make that significant bounce up towards what was support, so support becomes resistance, which was fine, as long, of course, as it either holds here or here, which was not the case. The 18-period average of highs, lows, and closes has been in a downtrend the entire duration since about in here when the market went into a bearish scenario. The volume on the SLV shares really isn't all that high. I haven't looked at the volume on the COMEX yet, but one thing that some people like to look for is that high volume washout period. I don't even see that yet, and I'd be a little cautious even at the 26 level, because the more often you test levels, the more likely it is that the levels are violated, and the 18 to 23 area I've been talking about for quite some time would be the next support level breaking through. Now, if you look at this even on a more short-term level, this is the 5-hour time frame, which shows the bounce at the 30 level here. Quick bounce, got above this 18 average on the 5-hour time frame, and as you can see here, this high got taken out, and that made this average start to increase. You find support in here, you lift off, and well, it didn't break out, but it did manage to get back within this range, which is fine. But you can see where the moment that really failed was in here, because that's when the 18 average gave in and back down to that 30 level. And the one thing I'd say quite often is that when you get to a level that you expect to find a level of support or resistance, the first time is the best time. Meaning if you were looking to go long in a spot like that, then you were able to pick off a little bit of a gain, maybe get into your stop in here if you're playing that paper game. And the second time that it got there, well, it just stabilized going sideways. It had a bounce lower than where the support level happened to be. And when 30 was taken out, it was obviously down to the races. This 18-period average has been in a resistance field for quite some time. So that'll be the silver analysis. Now, about a week or so ago, I was talking about the Greece 10-year. And what I stated was that after this major one-day move, bringing this down from around 40 to about 18, that it was approaching the 38.2% Fibonacci, and I was stating that don't be surprised if this thing is really not resistance, and if it continues to go through, that it would probably be a fast move up to the next level. Well, obviously that was the case, because this level in here, which was really not resistance, and now we're up to pretty close to this little area in here. When we take a look at this on a candlestick variety, the situation we have a big up move, and then you have this correctionary phase. If it gets above the 61.8% after really an outside period, a high volatile outside period, which was always more volatile when you have a higher high than the previous level and a lower low than the previous level, but that's after things really started to pick up in here. Then and it breaks above that 61.8 that I'm talking about really into here, then this thing is just breaking free. I guess you can say it's like the this is not good for the paper markets, but quite frankly, what more would you expect? This trend line is intact. If we draw a parallel line, we can do parallel lines for the entire duration. There's really three trends within this chart going back to the end of the 1990s. So you have this uptrend, you had this downtrend before, which you could make a parallel line, and maybe it might be better to draw the support lines first. Either way, you can see that the trends obviously change. So you go from a downtrend to an uptrend to a bigger uptrend. And something to note that there was a failed breakdown below this trend line before the rate of ascent actually sped up, because you can see that it broke above this resistance in along here. Now, I don't know what's going on with Greece. I actually did a quick search a couple days ago just to see, because I can see the data, I can see the numbers. So as I was seeing it getting above 30, 28, 29, then I knew something was going on with Greece, because this thing just went much, much higher. So therefore, what it is, maybe I can find out within the comment section below. But I also do realize that the currency system is guaranteed to cause massive debt because of the system and how it's created, and that the central bankers monopolize the money system or the currency system, create it, send or lend it out at interest. Thus, the interest payments do not exist. Therefore, debts guaranteed to exist, and the more aggressive that they lend out and the more aggressive interest rates are, which quite frankly are very aggressive, the more catastrophic the debt measures are going to be. Now, I'm surprised people weren't able to figure this out over the last 15 or 1600 days, but that's sometimes what happens in this world. You get surprised. Take care.